Hey, hello, welcome friends. In this video, we are going to discuss input tax credit related chapter. In input tax credit, we will discuss first some definitions like business. Business is given is a inclusive definition, means business includes any trade, commerce, manufacture, profession, occasion, etc. Even if there is no monetary benefits here, no monetary benefits also this will be treated as business. But it must be an incidence, an activity incidental or ancillary to it, or any activity same in the nature of no volume or continuity or frequency will be also treated as business. And supply of acquisition, here we will acquisition of goods may include capital goods and services in connection with commencement or closure of business. It must be a goods must be in commencement of business or closure of business. Next, provision of facilities provided by the clubs, associations and societies to their members, for there must be a consideration, from its to its members. Next, admission to any premises, there must be a consideration, it will be treated as business. Next, services as holder of an office accepted in course or furtherance of trade, profession or vocation. Services as a holder of office means if you are a chartered accountant and you are a holder of office of institute ICAI Bhavan accepted as a chairman, that is known as your profession. He is chartered accountant and accepted in the course of furtherance of as a office, that is ICAI holder. That next, activities of race club including by way of like totorizers, license of bookmakers or activities of licensed bookmakers in such clubs, it is also known as a business includes that one. Then next, any activities by government, local authorities as public authorities. Here government includes total both central government and state government, Next, what is meant by exempted supplies? Exempted supply means here exempted supply means it supply attracting the nil rate tax and supplies wholly exempted from CGST and IGST, only CGST and IGST. Next, and here exempted supplies includes non-taxable supplies. So exempt supply means attracting nil rate and wholly exempted from CGST and IGST, and it exempted supplies includes non-taxable supplies. Next, here capital goods means, what is meant by capital goods? Capital goods means goods value of which is capitalized in the books of accounts of person claiming ITC. If he is claiming ITC, these goods for in the books of accounts he has capitalized, and it must be intended use for business or furtherance of business or course of business, that must be treated as goods. Next, what it means by input? Input means other than capital goods, this will be known as inputs. And input service means it is a services which can be used intended to use in the course or furtherance of business. These three items, that is capital goods, inputs and input services, must be used or intended to use. Maybe this use may be for future purpose also in the course or furtherance of business. This is known as capital goods and inputs and input services. Next, input tax. What is meant by input tax? Input tax means tax payable under forward charge mechanism or tax payable under reverse charge mechanism. Here taxes, what type of taxes they will collect? CGST, HGST, UTGST, IGST. And input tax credit. Input tax includes IGST leviable on imported goods, and it excludes composition tax. Input tax excludes composition tax. Next, this is input tax related. Next, the non-resident taxable person. Who is mean by a non-resident taxable person? Non-resident taxable person means any person supplying goods and or services occasionally, means there is one occasion and a person is supplying goods or services, he is known as non-resident taxable person. Supplying goods on occasion, has a principal or agent or in any other capacity, he is supplying the goods on occasionally, has a principal or has a agent or has a capacity. even though having no fixed place of business or residence in India, one person outside from India, he came to here and as a principal or agent or in any other capacity he is supplying the goods as a occasionally, and he does not have any fixed place of business. He is known as non-resident person. Next, here what we missed, inward supplies. Inward supplies means receipt of goods or services by way of purchase or acquisition or any other means. With or without consideration. So inward supplies means we are receiving some goods or services by way of purchase or acquisition or by any other means, whether there will be consideration or not. With or without consideration, it will be treated as inward supplies. Next, outward supplies means we are sending registered person, supply person, taxable person, work contract, zero rated supplies. Zero rated supplies means here we will include two goods, that is export of goods and services. Or supply of goods and services to SEZ, special economic zones, or SEZ units, SEZ developers, that is known as zero rated supplies. Next, question number section 16. What is there in section 16? Section 16 relate to provisions of section relating to eligibility and conditions, that is eligibility and conditions to taking ITC, to read with rules summarizing that is here there must be who is the person want to utilize, who want to taking the ITC, he must be a eligible person. When we will tell that person he is eligible, he must be a registered person to take the credit of tax paid in inward supplies of goods or services. He must pay tax paid on inward supplies. He must be a registered person as per GST Act, and this goods which is taking these goods, he must be used or intended to be used in the course or furtherance of business. Here intended means they may be used in future. Here used means now or next further course of business. He must to satisfy some conditions for taking these credits, means whatever inward supplies he has making, and he has one tax and he must be utilizing. For that he must to satisfy 4 to 5 conditions. He must to satisfy 4 to 5 conditions. What is that conditions? Must ITC can be availed on the basis of any of the following documents. He must have some documents. What is the documents he must have? Invoice issued by the supplier of goods and services must be issued by the supplier, and invoice issued by the recipient receiving goods or services from unregistered suppliers along with proof of payment of tax, and in case of reverse charge mechanism, if in case of reverse charge mechanism, then from a recipient. In case of forward charge mechanism, that invoice from the supplier. Next, debit note issued by the supplier. When we are talking about input tax credit, debit note will be coming. Next, bill of entry or similar documents prescribed under Customs Act. If you are an customs related person, you must have exist bill of supply, then only you should take the ITC. Next, revised invoice. If you are changing any invoice, then revised invoice must exist. Next, document issued by the input service distributor, who is allocating the input based on head office and branches. He is known as input service distributor. So is the document. When you have this documents, you may utilize it. Next, the documents basis which ITC is being taken should contain at least the following documents. If you have a document, some document, one fair documents, no, in that document some matter will be mandatory, some matters will be mandatory, some contents must to be mandatory. At least this 5. What is this 5? Amount of tax charged, and description of goods or services, total value of supply of goods and services, GST number of supplier and recipient, GST number of supplier and register, and place of supply in case of interstate supply. So this much content must be required in invoice for taking the input tax credit. What is it? Amount of tax charged, description of goods or services, total value of supply of goods or service, GST number of supplier and recipient, place of supply in case of interstate supply. Next, no ITC of tax paid towards demands involving fraud. When you have paid any tax relating to show cause notices, that is section 74 or 129 or something another sections, they are raised. GST officers raised some demands and you have paid the amount, and that amount you cannot take the input ITC for tax paid in pursuance of any orders where any demand has been confirmed on account of any fraud, willful misstatement or suppression of fact cannot be availed as ITC. That is that statement. Next, restriction of ITC on invoice debit notes not furnished by the supplier in his GSTR1. In his GSTR1, you must file his GSTR1 that will replicate in our GSTR2. But we could not take the ITC if the supplier is not filed the GSTR1. That is, it is observed that as per rule 36.4, what is there in rule 36.4, it is observed that some taxpayers taking inflated or bogus ITCs even if the proper tax invoice or debit note in respect of inputs or input services are not available. Some persons are taking bogus inputs even though they do not have input in tax invoices. If any person asked for invoices, they are copy pasting the invoices and photo editing are doing some persons. Next, to exercise control over the malpractices of availing bogus inputs by the taxpayer, certain restrictions has been placed on availment of ITC. What is that certain restriction? The first restriction will be ITC on all invoices, debit notes which are furnished by the supplier in their GSTR1. You must file the in GSTR1 or using the IIF facility can be availed in full. The recipient get details of tax invoice and debit note furnished by the supplier in their GSTR1. If the supplier filed in GSTR1, the recipient will get in GSTR2A and GSTR2B. From GSTR2B to 2B and 2A will be the auto-populated data from the GSTR1. That is, GSTR1 is a monthly or quarterly statement containing details of outward supplies made by registered supplier. That is, some such details are outwards. Are communicated and made electronically auto-populated data to the respective recipient in GSTR2A. That is, GSTR2B is an automated ITC stock statement generated for every registered person based on GSTR1 filed by the supplier. Based on that GSTR2A and GSTR2B, you must claim the ITC. And IF means it is a quarterly scheme, it is a QRMP scheme, and file their details of outward supplies in first 2 months of quarter to pass on the credit to the recipient. This is related to IFF. However, in respect of invoices like invoices or debit notes, the details of which are not furnished by the supplier in their GSTR1 are using IIF, and hence it cannot seen in GSTR2A and GSTR2B a recipient. If one person is not filed is the GSTR1, then you can take ITC up to ITC can be availed only up to 5% of eligible ITC. If you have an invoice of 100 rupees but your supplier is not filed is the GSTR1, now you can take has 5 rupees provisionally. 5 rupees for provision, but this 5% provision is now withdrawn or suspended. Next, GSTR1. In other words, the ITC claim should not exceed the 105% of the total ITC. What is there in GSTR2B? 1 lakh. How much you can claim? 1 lakh plus 5%. 1 lakh 50,000 or 1 lakh 5,000. 1 lakh 5,000, I think so. Next, to file GSTR2B. And the above concept has been this ITC self-assessment basis on the restriction he is not imposed through common portal. Next, the above concept has been illustrated in a diagram given next page. So they are given next page. What is this? ITC and invoices, invoices or debit notes which have been furnished by supplier in their GSTR1 using IIF. then you can claim 100% ITC can be filed, on which invoices debit notes if all other conditions of availing ITC are fulfilled. What is the conditions will be fulfilled? You must have an invoice, and that invoice, the data must be considered. Some contents is there, no, what the contents, the amount of tax, description of goods, total value, GST numbers, place of supply, that details is conditions are satisfied, then you can claim 100%. If ITC and invoice debit notes which have not been furnished by the supplier in their GSTR1 or using IIF, then you can claim up to a 5% of eligible ITC available on invoice debit notes furnished by the supplier to their GSTR1s or using the IIF facility can be claimed on such invoice or debit notes. Next, restricted amount of ITC claimed on ITC debit note not furnished by the supplier in their GST1 should not exceed the actual eligible ITC available in the respective invoice not furnished. Next, invoice on ITC. Invoice on which ITC is not available under any of the provisions, example under section 17(5), are not considered for calculation of 5% of eligible credit available. Next, to full ITC. Full ITC can be available in respect of IGST paid on import documents issued under reverse charge credit received from the IST which are outside ambit of the section 37(1). Next, restricted ITC 5% is calculated on the consolidated basis. This 5% will be calculated on the consolidated basis, that is on total eligible ITC from all suppliers against all supplies whose details have been furnished by the suppliers. Here 5% will be taken from all suppliers, not for individual invoice basis. Next, there is one example. What is there in example? Atlas Private Limited. Atlas Private Limited is a manufacturer of taxable goods. Okay, it has received 50 invoices of inputs and input services for various suppliers during the month of September. Invoice involves ITC of 5 lakhs. So he is received 50 invoices, and the ITC related that involve 5 lakhs. Supplier has furnished in their GSTR1 40 invoices involving 3 lakhs. So out of 50 they are furnished 40 invoices. Out of 5 lakhs you can see in GSTR2A ITC of 3 lakhs as on the duty of filing GSTR1. ITC can be claimed by Atlas in its GSTR3B for the month. How much he can claim for the 3 lakhs plus 3 lakhs into 5%, that is 15,000. 3 lakhs 15,000 he can claim. So amount of eligible ITC as per GSTR1 of supplier plus eligible ITC available in GSTR1 of supplier plus 5% of amount of eligible ITC available as per GSTR1 of the supplier, that is 3 lakhs plus 15,000, 3 lakhs 15,000. Next, Atlas Private Limited may avail balance ITC, that is 1.85 lakhs in case suppliers uploaded details of some of the invoices for the month of September involving ITC of 1.762 out of invoices involving ITC of 2 lakhs. Details of which had not furnished by the supplier. 3 lakhs plus 1.762 lakhs is equal to 4.762 he may claim. So whenever your supplier uploaded in GSTR, then you may claim for remaining amount. Next, in above example, if the supplier furnishes in the GSTR1 40 invoices involving ITC of 3.5 lakhs as on the due date of filing. So now it was 3.5 lakhs. 3.5 lakhs means 3.5 into 5% means 17,500. Total 3,67,500. You can claim eligible ITC for you 3,67,500. Next, also may avail balance of ITC whatever the balance amount 1.325 lakhs in case of supplier furnish details of some invoices involving ITC 1.262. So 1.262 out of outstanding invoice involving 1.5 lakhs. So 3.5 lakhs plus 1.262, 3.5 lakhs plus 1.262, 4.762 is the amount. Next, in the example number 1, if the supplier furnishes in their GSTR1 42 invoices involving ITC of 4.8 lakhs as on the due date. So 4.8 means 4.8 into 5% means I think it was 20, it crosses the amount of 20. 20,000. So 20, if the amount is crosses the 20,000 means we have only 5 lakh input. Up to the 5 lakh only we can utilize them. So here what is their ITC that can be declined. Amount of eligible ITC as per GSTR 1 plus 5% of ITC available, that is 4 lakh 80 plus 20,000 we are taking is equal to 5 lakhs. That is additional ITC avail shall be limited to ensure that the total ITC avail does not exceed the total eligible ITC, does not exceed the total eligible ITC. That is section 16.1 deals. Next, section 16.2. Section 16.2. What is there in section 16.2? Receipt of goods or services bill to ship model. Bill to ship module. Okay. What here what we can do this, if the goods was taken in bill to ship transactions means here the persons, 3 persons will be involved. There may be 3 persons. On the order of 1 person, goods will be sent by the supplier and recipient to the persons. There is no relation between the supplier and recipient. Here what is there under this model? Goods were delivered to a third party C and the direction of customer person B who purchased the goods from the vendor A. So supplier is the vendor and the recipient is the B and third party is the C who is taking the goods. Next, in effect two supplies, there may be involved two invoices. One is from supplier to principal person, that is third person, and supplier to third person to recipient. One is bill to ship and one is delivery at the point of delivery of the goods related. Next, two supplies taking place in here. Two supplies will be taken first, that is from A to B 1 and from B to C 1. Thus under this model the customer who purchased the such goods does not receive the said goods. So who is purchasing the goods, he is not receive the goods because the goods will order for another person's name. Next, here there are two suppliers. Here it is deemed that registered person, here deeming provision will be applicable, and that person who is not receiving also treated as receiving the goods and send it to the third party has received the goods. In other words, the goods delivered to another person on the direction of registered person by way of transfer of documents of title or otherwise either before or during the movement are deemed to have been received by the such registered person. So ITC will be available to registered person on whose order the goods are delivered to a third person. Similarly, in case of services also same like that also, when there is a involvement of third party. For example, there is one example. So here A is a trader who place an order on B for consignment of soda hash. A receives buying order from C for the same quantity of soda hash. So A is a trader who place an order of B and A got the order from C. So what the A does, the A instructed B send the goods to C. Deliver the goods to C, and in turn he raises an invoice. Though the goods are not physically received at the premises of A. Here goods are sent to C places, but A is not receiving the goods. But even though not receiving the physical goods, he must raise an invoice. As per section 16.2 allows ITC of such goods to A. So A will take the ITC from B and he will transfer the ITC to C. Next, the registered head office. The registered head office of ABC Private Limited enters into a contract with DEF Private Limited of New Delhi for repairs and maintenance of computer services installed at its registered branch office in Bengaluru. So head office stayed at New Delhi and they contracted with DEF Limited, which is in New Delhi, and repair services at Karnataka. DEF Private Limited issues invoices in ABC Private Limited, that is contractor who is giving the bill at in New Delhi only. Now through the actual services are received by the branch of office and not by the head office. Here section 16.2b allows ITC of such repairs and maintenance to head office. Head office is allowable even though they are not received the services. Next, tax leviable on supply actually paid to the government. The amount must be paid to the government. If you are not paid the government tax amount, then you will not eligible to claim get the ITC. So who is the person supplier? Who is the person supplier is must required to file is GSTR1. If he has not filed the GSTR1, if you are not get the GSTR2A and GSTRB data, so recipient only knows that disclosure of turnover relating to his supply to the government. So but that there is no evidence that he has paid the tax of that supply. Next, filing of return. Here filing of return, section 16(2)(d), 16(2)(d). What is there? The registered person taking the ITC must have filed his return under section 39. What is the time limit for section 39? That is GSTR to be the time limits will be 20, 22 and 23, I think so, some states. Next, GST3B in filing of monthly returns. Monthly basis, the taxpayer should file GST3B. He must file the GST2B to avail the ITC. In GST3B only we can claim that ITC. Next, goods received in lots. ITC available on receipt of lots. Last lot. When your goods is receiving the lots, then ITC allowable upon receipt of last lot. If you are taking 3 lorries of stock, 2 lorry stock was came and 1 lorry stock in under process. After that third lorry stock was came, then only you are eligible to claim ITC. Then only you are eligible for ITC. Here one example. Example means XYZ entered into a contract with ABC for supply of 10 MT of chemicals for 1,18,000 inclusive of GST. That is 10 MTs 1 lakh rupees and 18,000 GST. In the month of August, the chemicals to be delivered in a lot over a period of 3 months. So ABC raises invoice for the entire amount in August and XYZ also make the payment in the same month, but the supply is completed in November. When the supply is completed, then only you are eligible to claim ITC. So November month it was completed. So through XYZ pay the full tax as early as August, it can take the ITC on the same only on receipt of last installment of the chemical in the month of November. So whenever he is receiving the goods at November month, then he will claim ITC. Next, payment of invoice to be made within 180 days. Payment to be made within 180 days. Second proviso to section 16(2). Read with rule 37 of CGST rules. What is this? This is related to the person who is supplying the goods and who is receiving the goods. He must pay the amount within 180 days. If he has not paid the within 180 days, ITC to be added to output tax liability with interest at the rate of 18% if value plus tax of the goods or services not paid within 180 days for the issuance of invoice. From the issuance of invoice 180 days plus and tax amount, that is tax amount plus 18% interest also added. Next, if you paid this amount on later time, then whenever you have paid, then you can claim the ITC amount only, and interest amount you cannot claim. Input. Next, here there is exceptions. This condition of payment of value of supply plus tax within 180 days does not apply to some person. That is reverse charge supplies, where there is a reverse charge supplies, or deemed supplies without consideration. There is deemed supplies without consideration. Next, addition made to value of supplies of account of supplier liability being incurred by the recipient of supply. So these 3 persons not required for this 180 days condition, payment condition. Reverse charge supplies or deemed supplies without consideration, addition made to the value of supplies on account of supplier's liability being incurred by the recipient of supply. This is totally section 16 related. And here there is one example. We will see that example number 7. What is there in example number 7? Example number 7 deals that due to quality of disputes. There is due to quality of disputes, P2B withheld payment on machine supplied by the vendor till it could be rectified it could be rectified. So there is some defect in machinery, so he has not paid the amount. Over 180 days went by these disputes, so 180 days was disputed. The credit taken by the P on the invoice got added to the output tax liability. After 180 days was completed, if he has not paid the amount, he has taken the ITC at the month of when he received the goods. So now he can add back to the tax amount to the output tax liability of Jet Limited, and it has to pay back the creditor. Next, only after the vendor rectified the machine and PZP realized the payment could be PZ, then credit will be taken again. Here we also paid the amount of interest at the rate of 18%. But when the amount was paid, you cannot claim the interest portion of ITC, only the portion of tax amount. Next, if depreciation claimed and tax components. ITC not allowable. Section 16(3). If depreciation claimed and tax components, ITC is not allowed. If you are purchased one item and if you are claimed fully in your books and you are claiming the full depreciation, then ITC is not available on that amount. For example, a registered supplier purchases a machine for business purpose. He has purchased a machine for business purpose. The value of machine is 10 lakhs and GST paid therein is 1.8 lakhs. ITC 1.8 lakhs cannot be availed by the supplier if he has claimed depreciation on such amount under income tax law. So value of machine 10 lakhs plus 1.8 lakhs. In his books balance sheet he has shown 11.8 lakhs, and on 11.8 lakhs he will claim depreciation. When he is claiming the depreciation, then ITC is not allowable. Next, time limit for availing ITC. Here ITC will claim ITC pertaining to the particular financial year can be availed by due date of filing of return for the month of September. For the month of September of the next financial year, or filing of annual return, whichever is earlier. You can take the ITC. For availing the ITC, the due date will be the next year September month. Due date of filing of return for the month of September of succeeding financial year. That is, for the month of September return will be October 20. Up to October 20 is your time limit. Succeeding financial year, or date of filing of annual return, whichever is earlier. Annual return date will be December. Whichever is earlier means if you file the return in 30 August, then 30 August will be the claiming of ITC. Next, ITCs on invoice pertaining to a financial year or debit notes issued on any financial year can be availed any time till the due date of filing of returns for the month of September of the succeeding financial year, or date of filing of the relevant annual return. Here relevant annual return financial return will be 31st December. Next, here some of the upper limit for taking the ITC is due date of filing of return for the month of September is the next financial year, or date of filing of annual return, whichever is earlier. Here the underlying reason for the restriction that no change in return is permitted after September of next financial year if annual return is filed before the month of September also. Next, here one exception, that is section 16(4). Does not apply if re-availment of ITC reversed earlier. What is this re-availment? When you have not paid the amount within 180 days, you are reversing the amount. No, that is adding back to the output tax liability and plus interest. That re-availing credit means when you pay the amount back, then you can claim the ITC. That ITC is not time limit. For 180 days time limit is not there for that limit. That is revealing of availment of ITC. Example number 9. What is there in example number 9? Here Hercules machinery delivered a machine. So here one machine was delivered to XYZ in the month of January under invoice number 49 dated 28th January 2021 for 4,15,000 plus GST and undertook trial run and collaboration of the machine as per the requirement of XYZ. Okay, the amount chargeable for the post delivery activities was covered in debit note raised in the month of April 2021. So debit note was raised 2021 for 50,000 plus GST. Okay, XYZ did not file its annual return till the month of October. Due date for the filing of the return month of September is 20 October. Here, the time limit to avail ITC in respect of tax paid and supply of invoice, that is 40 number invoice number. 28th January you have filed one return or delivered invoice. If you miss the ITC, you can claim up to the 20 October. Tax paid and supply of invoice would be 20 October. Since the debit note is received in the next financial year, since when the debit note was received April next year, the time limit for taking ITC available on 50,000 is 20 October 2022. Here in past what we can do in case of debit notes, we will see the original invoice date, but after some days, from now onwards, we are seeing the invoice is different and debit note is different. So invoice time limit is different, debit note time limit is different. From debit note invoice date, debit note date will be considered for debit notes, and invoice note date will be considered for invoice for availing the ITC. For the debit note, we cannot consider the invoice number, respective invoice number, that is there here. Next, restriction of ITC in proportion, that is taxable supplies business purposes. When ITC is restricted in proportion of the use of goods and services in taxable or zero rated or for business purpose. This is elaborated in next one. ITC not available in certain supplies, that is section 17(5) will be discussed. That is, it is been blocked for specified goods and services. It can be deal in section 17. What is there in section 17? We will see that apportionment of credit and blocked credit. Credit and blocked credit we will be apportioned to this. We will see in analysis part directly. What is there in analysis part? Here, analysis of section 17. Come on. Okay. Provision for section 17 is related to apportionment of credit and blocked credit. Here we must learn with rules also, that is rule 42, rule 43. Rule 42 and rule 43 will be also considered. First, apportionment of credit. How will be apportionment of ITC? Means here first we will see this. We will see the how they are using apportionment between goods or services. When they are used partly for business and partly for non-business purposes. Partly for business and partly for non-business. ITC available only to the attributable of business purposes. If goods or services used partly for making taxable supplies and partly for exempted supplies, then ITC available only as attributable to taxable supplies, including zero rated supplies. We will bifurcation like this. Here exempted supplies includes. What is the exempted supplies includes? That is includes reverse charge supplies and transactions in securities, and excludes activities specified in schedule 3. Schedule 3 will be excluded. Next, ITC will be excluded. Zero rated supplies and ITC available in no tax. Next, except sale of land, building where the entire consideration is received post completion certificate, first occupation, whichever is earlier will be considered here. Next, as per rule 43-42, here one section 216(2) of IGST Act specify that ITC may be availed on inward supplies for making zero rated supplies. But notwithstanding the exempt nature of zero rated supplies is an expression that in zero rated we will cover that exports and supplies to such units or such developers. Therefore, ITC is available on goods and services used for supplies made in the course of exports or such units or such developers. This is also will be considered for ITC. Next, here two examples. What is there in these examples? A registered person. A registered person in the business of manufacturing shoes. He is in business of manufacturing shoes. Okay, he gave 50 pairs of shoes to his friend free of cost. Free of cost. ITC and input services attributable to such 50 pairs being used for non-business purpose will not be available. So he is used for non-business purposes. Next, so for the 50 pairs he cannot claim the ITC because he is used for non-business purposes. 50 pairs he is not used for non-business purposes. Next, a registered person manufactured. What he has manufactured? A product X. Product X he has manufactured. Okay, product X is manufactured, chargeable at the rate of 18% GST. Next, product Y chargeable to nil rate of tax, and product Z which is exported without payment of tax under bond. So here they register person manufacturing three products: product X, product Y, product Z. Product is chargeable 18%, product Y is nil rated, product Z is exported product without payment of tax under bond. So all the three products are manufactured from common inputs. So he is taking the inputs are common inputs and common services, and ITC on inputs and input services attributable to product Y being exempted will not be available. So being exempted will not be available. So this much of amount, that is exempted service, exempted turnover is there, no, that much of exempted turnover will be apportioned. It will be deducted from the common ITC. We will deduct from common ITC. Next, what the methodology for apportionment of credit of inputs? How we will calculate? The methodology for calculation will be here. They were provided for T1, T2, T3. They are providing the calculation methodology for calculating the amount of ITC. Okay, how we will calculate? First, what is the compute the common credit? We will compute the common credit first. Common credit will be T, indicated as T. Next, from common credit we will deduct which is used for non-business purposes. Okay, after that non-business purposes which is used for exempted purposes, exclusively for exempted purposes will be deducted. After that we will take from first what is there we can take, and this is from non-business purposes will be deducted, and exempted supplies will be deducted. After that which is the blocked credit as per section 17.5 will be deducted, and we will get the total amount, that is ITC credited to electronic credit ledger. Remaining ITC credited to electronic credit ledger. What we have taken from T, that is common credit, we have deducted three items. What? Non-business purpose, next exempted purpose, and blocked credit. This was three deducted, and after that we get that in ITC credited to electronic credit ledger, and from this T4 will be deducted. T4, what is means by T4? Credit attributable to used in exclusive in taxable supplies, including zero rated supplies, which is inputs or input services that is intended to be used exclusively for taxable supplies, including zero rated supplies. It will be deducted. Next, it is related to common ITC available for apportionment. Then we will reach the common common credit, and from this we will they are provided one example. See the example. What is there in example? Make assumptions that Hawaii slippers are exempted. Okay, Hawaii slippers are exempted. Take a case of easy footwear manufactured of 2 varieties of Hawaii slippers, so and 5 varieties of other sandals and shoes. Dyes are used in the manufacture of all footwear. So dyes is a input product they are using, and they are producing exempted and taxable, and others they are providing. So however, bright pink is used only for one of the Hawaii varieties, and black is used only for the sandals, shoes. Blue and yellow are used for all varieties. Brown is used for non-business purposes. From this we need to deduct non-business purpose exempted prices. Blocked credit will be deducted. After that we will get the amount of electronic credit ledger ITC, and from that we will deduct that credit attributable to exclusive in taxable supplies. Then we will get the common credit. Okay, inward supplies during the month. Okay, input tax on brown dye 10,000, input tax on bright pink dye 90,000. This is T2. What is meant by T1? T1 is non-business purpose. Next, input tax on bright pink dyes. This is T2. T2 means what? Exempted supplies related. Next, input tax on black dye 40,000. What is meant by T4? That is credit attributable to used exclusively in taxable supplies, including that. Next, T4, T1, T2, T4. Okay, input tax on blue dye blue dye. Next, 1 lakh. That input tax on yellow dye 15,000. Next, total input is 2,55,000. From 2,55,000 we will deduct the amount of T1, T2 first, and T3 there is no T3 was provided, so we will reduce that. After T3 we will reduce the T4. So T1, T2, T4 will be added first. From that 2,50,000 amount will be reduced. Total input tax reduced by T1, T2, T4, that is 1,40,000 is 1,15,000. Next, amount of credit available is 1,15,000. This is apportioned as given below steps. So whatever the amount of common credit will be apportioned now. Apportion 1, that is we will get D1, D2 here. What is these steps? Steps will be first D1 will be credit attributable to exempted supplies, and D2 will be credit attributable to non-business purpose. So first we will see the exempted supplies related. D1 is equal to E by F into C2. E means value of exempted supplies during the tax period divided by total turnover in the state during the tax period into C2 will be considered. What is meant by C2? That is after the common credit which is exclusively taxable was removed, that amount. Next, here we will get D1 with related to exempted supplies, and we will also deduct that D2. What is D2? D2 is not there here. Okay, D2 is not there, I think so. Here D2 is there. From D2 is non-business purposes. What is the D2? Easy footwears. How apportion common credit into credit attributable to exempted supplies. For which manufactured 2 varieties chips exempted was provided. D1 is calculated, aggregate value, note was provided, and presently central excise duty leviable on manufacturer ECF is not easy footwear which manufacture 2 varieties of exempted Hawaii slippers and 5 varieties of taxable sandals and shoes are following. Turnover in October has 1,15,000. Common credit that has been apportioned. Okay, apportioned. Turnover of all varieties of taxable shoes and sandals 2 crores rupees. Hawaii turnover will be 3 crores will be the turnover. Shoes and sandals turnover will be 2 crores, and total turnover of all footwears during 5 crores. That is okay. F. No inputs or input services are used for business purposes. Business purposes will be 3 crores divided by 5 crores into 1,15,000. That is D1. D1 means what? That is related to E by F into C2. E by F means what? Value of exempted supplies during the tax period. What is the value of exempted supplies? Divided by and total turnover of the state. Into C2 will be considered. We will get the D1. After that D2 will be, that is common credit related to these business purposes will be non-business purposes will be received, that is partly for business purpose and partly non-purpose business. Compute D2. D2 is 5% of C2. 5% of C2. Next, they are directly giving. These two are, that is D1 and D2 are ineligible ITC. This must reversal. D1 and D2 will be reversal in the month of which we are filing. So we will reversal this D1 and D2, that is C2 D3 minus D1 and D2. D1 D2 will be reversal, that is step 4 provided. Restrict ineligible credit, D1 D2 will be reversal. Next, what we will get, then eligible ITC attributable to business and taxable supplies including ZRS will be get. Total eligible ITC will be T4 plus C3 we will get. T4 plus C3 will be get. Next, methodology for apportionment. Methodology for apportionment of Rule 43 of CGST. Rule 43 of CGST, common capital goods. In case of capital goods reversal. Okay, what is there in capital goods reversal? We will see this capital goods reversal. Here determination of common credit. T1 will be, TC will be completed. First step 1. After that, step 2 will be determine the common credit during the useful life of the capital goods for tax period as under and denoted the same. Tax period will be taken, useful life will be taken 60 months, that is 5 years will be considered. 5 years will be considered. Next, apportionment common credit. Apportionment common credit attributable to exempted supplies as under, that is TE is equal to E by F into TR will be considered. E means aggregate value of exempted supplies made during the tax period. F means total turnover in the state during the tax period. That is related to capital goods related. Capital goods. Changes common use residual item. Okay. After this, restricted ineligible credit. Next, optional method for banks. And section 17.4 read with rule 38. So they have two options. Option 1 is avail proportionate ITC, or option 2 will be 50% of eligible ITC. 50% of eligible ITC. They may claim any option. So availment of proportionate ITC or availment of 50% of eligible ITC. From 50% eligible ITC, we need to remaining 50% will be ITC will be lapsed. When we are claiming, we are ready to claim 50% ITC means we are ready to bear 50% loss. Next, restriction of 50% shall not apply to the tax paid on supplies received from another registration within the same entity. If you are in a same entity in another registration, then that 50% restriction will be not applicable, not available. Next, option 1 exercised cannot be withdrawn during the part of the year. So once you have taken, once you have exercised, cannot be changed during the remaining part of the year. So you must continue. You must select before starting the year. That is option 1 or option 2. Option 2 means proportionate will be taken. Option 2 means 50% will be considered. Here we will consider remaining 50% will be lapsed, and 50% is not applicable for the case if you are another registration with the same entity, and once if option is selected, it will not be withdrawn from during the month. This is related to banks, NBFCs, banking companies and NBFCs. Next, blocked credit. Section 17.5. What is this 17.5 blocked credit? Here blocked credit means there may be ineligible market value. This will be considered motor vehicles and other conveyance and related services, that is insurance services and repairs and maintenance services. Here what is this motor vehicle? If you use the motor vehicles, then it will be treated as blocked credit. ITC and tax paid on almost every inputs and every services used for supply of taxable goods and services is allowed under GST except a small list of items provided in section 17(5). That is, ITC on such items is not allowed even though the same may qualify as input services or capital goods and used for in the course of furtherance of business, even though you are used for furtherance of course of business. Next, the negative list covers mainly the items of personal consumption, which is personal consumption. It is treated as blocked credit, and input services used which result into formation of any immovable properties. If you use some property that creates one immovable property, it will not be taken for, it is treated as blocked credit, except plant and machinery. That plant and machinery we can use for business purpose, then that plant and machinery ITC you can claim, there is no restriction. If you created one asset which is capital asset like building, then it is a blocked credit. Next, telecommunication towers. Telecommunication tower, if you use items and install telecommunication tower, that telecommunication tower inputs will be blocked credit. Next, pipeline laid outside the factory premises, etc., the tax paid as a result of detection of evasion of taxes. These all are blocked credit list. Okay, the various goods or services on which credit is blocked as discussed as under. Blocked or discussed credit as under. In case of blocked credit for motor vehicles, motor vehicles and other conveyance and related services, that is insurance services and servicing and repairs and maintenance, where motor vehicles and conveyance has been defined, that is CGST Act. Motor vehicle excludes, that is vehicle running up to fixed rails. Next, special purpose vehicle for being used in the factory or any enclosed premises. If you use the vehicle for a special purpose vehicle has a factory, then it is not a motor vehicle. Next, vehicle which is less than 4 wheels fitted, with engine capacity up to 25 cc. Thus, railways 2 or 3 wheelers with engine capacity of up to 25 cc, bicycle, etc. do not fall within the definition of motor vehicle with market. Here, broadly ITC is blocked on motor vehicles, vessels and aircraft used for passenger transportation. Here ITC will be blocked on motor vehicles, vessels, aircraft used for passenger transportation. If you are passenger transportation, using your motor vehicle for passenger transportation, then that ITC will be treated as blocked credit ITC. You cannot claim. Next, here there is exception. Further, ITC also blocked on certain services relating to motor vehicle, vessel, aircraft, namely insurance, servicing and repairs and maintenance. The basic principle here is that motor vehicles, aircraft, vessel on which ITC is blocked, the ITC on services, insurance, servicing and repairs are pertaining to such motor vehicle, vessels and aircraft is also blocked credit. So, the blocked credit relating to motor vehicle, aircraft, vessel and related services are discussed here under. What we will discuss here under, if that vehicle, motor vehicle, goods and services on which credit is blocked. When the credit is blocked means if that is a 12 passengers capacity, then it will be blocked credit. That is, motor vehicle for transportation of person with seating capacity less than or equal to 13. But means if you carrying the 12 sitting capacity vehicle, that is blocked credit, including driver referred to ineligible motor vehicle in this table. Next, exception to goods and services mentioned in column 2 on which credit is allowable. When credit is allowable, ineligible vehicle which when used for any of the following eligible purposes. If you use for following purposes, you can eligible for claiming the ITC. If you use that motor vehicle for making further taxable supplies of such motor vehicle, making taxable purpose, taxable supply of such vehicles, or making taxable supplies for transportation of passengers, or making taxable supply of importing, training and driving such motor vehicle, then you can claim the ITC. You can claim the ITC. Next remarks. Here ITC on ineligible motor vehicle used for any purpose other than the eligible purpose is not allowed. That is blocked credit. Eligible purposes means three purposes. That is, you must use it for further taxable supply, and you must use it for transportation passengers, and you must be importing, training and driving skills. If second person, that is transportation of passenger, that must person seating capacity must be more than 12. If it is less than 13, then it will be treated as blocked credit. Next, ITC on motor vehicle for transportation of person with seating capacity must be greater than 13%, including the driver. Use for any purpose is allowed. ITC on motor vehicle other than ineligible ITC vehicle. Example, motor vehicle used for transportation of goods, dumpers, tippers, etc. It can be claimed as ITC for any purpose is allowed. Next, vessel and aircraft. If you are using a vessel and aircraft, then vessel and aircraft when used for any of the following purpose, that is for making further purposes, or making taxable transportation of passengers, or making taxable supply of importing, training and navigation such vessels, or making taxable supplies of importing, training and flying such aircraft, or transportation of goods, then you can claim as ITC. ITC on vessel and aircraft used for any purpose other than eligible purpose. Next, in case of general insurance, servicing, repairs and maintenance relating to ineligible motors, vessels or aircraft, then such services relating to ineligible motors, vehicles, vessels or aircraft when used for eligible purposes what the above said. Next, the such services were received by manufacturer of ineligible motor vehicle or vessel or aircraft, or supplier or general insurance or services ineligible motor vehicles, aircraft insured by him. Here the remarks will be: ITC is not allowed on services of general insurance, services, repairs or maintenance relating to motor vehicle, vessel or aircraft. ITC on which not allowed. When there is no ITC is allowed, then you cannot claim the ITC for these services also. ITC allowed on services or general insurance, repairs and maintenance on motor vehicle where the vessel, aircraft ITC is allowed. When the ITC is allowable for motor vehicles, that above conditions was that satisfied, that is more than 13% of passenger transportation or furtherance of course of business used for that motor vehicles, that conditions will be satisfied. Next, leasing, renting or hiring of motor vehicles, vessels or aircraft on which ITC is allowed. That is such services when used for making an outward taxable supply of some same category of services or has an element of taxable composite or mixed supply. If used for taxable composite and mixed supply, then such services are provided by an employer to its employee under statutory obligations. Next, here remarks will be: ITC on leasing, renting or hiring of motor vehicles, vessels or aircraft on which ITC is available is also allowable. When if you allowable, then here also allowable. Next, ITC on which service is allowed in case subcontracting, that is when such services are used by the taxpayer who is in same line of business. If you use in same line of business, you will be eligible for ITC. Here 12th point, or example of 12. Some examples was provided to get the knowledge about the ITC relating to motor vehicles and vessels, and another one renting and leasing, and another one. Here examples will be first example will be: ITC on car purchased for manufacturing company for official purpose to its employees is blocked. It is blocked. ITC on cars purchased by manufacturing company was purchased and using for official use of its employees, it is also a blocked credit. Next, ITC on car purchased by a car dealer. If you is a furtherance of course of business for sale to customers, then ITC will be allowable. Next, ITC on cars purchased by a company engaging in renting out of cars for transportation of passengers is allowable if is there a furtherance of course of business. Next, ITC on car purchased by a car driving school. If he is in using a training center, he can allowable as ITC. Next, ITC on bus seating capacity of 24%, that is greater than 12%, purchased by company for transportation of its employees for their residence to office and back, then ITC will be allowable. Next, ITC and truck purchased by a company for transportation of its finished goods is allowable. If you purchase the truck and you are using for transporting the goods, finished goods, then ITC will be allowable. The ITC on aircraft purchased by manufacturing company for official use of its CEO, even though he is a CEO person, that vehicle ITC will be blocked ITC. Next, 19th one, ITC on aircraft purchased by an aviation school providing training on flying aircraft, so training purpose ITC will be allowable. Next, ITC and general insurance taken on car used by employees of a manufacturing company for official purposes, even though it is a official purpose, car is used for employees, it is blocked credit. It will not be allowable. Next, ITC and maintenance of repairs and services availed by the company for truck used for transporting its finished goods, then ITC will be allowable. Next, to ITC and general insurance services taken on car manufactured by a manufacturing company, then allowable. ITC will be allowable. This is related to vehicles and that one. Next, what we will discuss here will be that is related to food beverages related. Next, food beverages, outdoor catering, healthcare services. Here there same also. What is the care? First, food beverages are outdoor catering services, or beauty treatments, or health services, or cosmetic plastic surgery, or life insurance of health. They will not be treated. There will be these all items will be treated as a blocked credit, relating to these credits, black credits, but some exceptions. What is the exceptions? Such goods and services used by the registered person for making an outward taxable supplies of the same category of goods. That is, if you are in a outdoor catering and using that outdoor catering for input and providing outdoor catering only, then you can claim the ITC. If you are a beauty treatment business and using the beauty treatment items and you are producing the beauty treatment to other persons, then you can claim the credit. If you are a consumer, if you are using beauty treatment, then you cannot claim the ITC of that beauty treatment. That is therefore making an outward taxable supplies of the same category of goods and services as an element of taxable composite or mixed supply. Such goods and services when provided by an employer to his employee under a statutory obligation. There must be a statutory obligation. If any person provided, if employer provided life insurance facility to employee on the statutory obligations of, then it will be allowable credit. Next, remarks. ITC on such goods and or services is allowable in the case of subcontracting, that is when such goods and services are used by the taxpayer who is in same line of business is used, then allowable expenditure. Example, outdoor catering services availed by another outdoor catering area. Next, where such goods and services are provided by the employer to its employee without any statutory obligation, ITC therein is blocked. So there is no statutory obligation. You are giving some benefit to employee on that ITC, that is ITC related to that will be blocked credit. Next, membership of club, health and fitness centers for their members. That is clubs, health and fitness centers, they are providing their to members. Such services when provided by an employer to its employee under a statutory obligation. Here, when such goods and services are provided by employer to its employee without any statutory obligation, then it is blocked credit. Next, travel benefits. Travel benefits extended to employees on such vacation such as leave engagement or home travel concessions. This is also a blocked credit. Exception to that, such service when provided by an employer to its employee under statutory obligation. If there is a statutory obligation, then you can provide and that you can claim the ITC. If there is no statutory obligation, you are providing, just you are entertaining your employee, you cannot claim the ITC. Next, here one examples, some examples was provided. First, a manufacturing company purchased food items for being served to his customers free of cost. So he is not using for same course of business. He is not eligible for outdoor catering services. Blocked credit. Next, AB and Co, a caterer of Amritsar, has been awarded a contract for catering in a marriage to be held in at Ludhiana. The firm has given the contract for supply of snacks to be served in the marriage to C.D. and Sons, a local caterer of Ludhiana. So here one main person is there. He got the catering service for small item, that is snacks item, was taken from other person. For other person who is providing the snacks, and he is giving the credit to big person, and big person he may claim the ITC because he is a furtherance of course of business is exist. So in that ITC he is allowable. ITC will be allowable. ITC and outdoor catering services availed by a garment exporter for marketing event organized for its prospective customers. There is no furtherance of course of business. So it is treated as blocked credit. Next, 26, outdoor catering services is availed by a person to run a free canteen in his factory. So if he is running a factory, if the factory requires a company to set up a canteen in its factory, if a factory act require, then it will be allowable. If not, it will not be allowed. The managing director of company has taken membership of club, the fee for which is paid by the company. ITC and such services is blocked. Next, 28, example 28, a company avails services of travel agency for organizing a free vacation for its top performing employees. Here ITC for such services will be blocked services. Next, work contact related. What is there in work contact services? Work contact services for immovable properties. Here immovable properties. If the immovable properties, what is meant by immovable properties? That is one major input service ITC which is blocked his input service relating to construction of activity like office building, factory building. If you are constructing one office building or factory building for using the items, and on that items if you have an ITC, you cannot claim that ITC except that he is related to in case of person like builders or developers and contractors who undertake the construction for others. However, ITC is available for routine construction related services like if you have a constructed building already completed, and on that construction building you are doing some repairs. On that repairs the person was charged GST. You can claim that GST as a input is allowable. Next, repairs and renovations of office or factory buildings. That's broadly ITC on respect to construction service is not available. Only at the first time it is not allowable. Not available when expenses are capitalized in the books of accounts. Next, here it need to be noted that capitalization of expense does not depend on whether the taxpayer intended to avail ITC, but on the basis of accounting standards GAAP. So capital asset will be created based on GAAP, not on the assessee's intention. Next, work contract has been defined in CGST Act. What is the defined? Essentially, work contract is composite supply involving both goods and services under headsway law definitions. That is, work contract includes work in relation to both movable and immovable properties. However, under GST law, ambit of work contract is confined only immovable properties. Here, immovable properties means what? Meaning of immovable property. Immovable properties as not defined in under GST law. GST law it was not defined. So as per section 2 class 26, that is general class, what is the immovable property means? Immovable property means it includes land, benefit arise out of land, and things attached to the earth and permanently fastened to anything attached to the earth. Here attached to the earth means defined in section 3 transfer of property acts. Rooted the earth in the case of trees, shops. However, immovable properties under transfer of act does not stand. Timbers, growing crops or grass. Timbers, growing crop or grass is not a immovable property even though they are attached with the earth. Next, embedded in the earth. In the case of walls or buildings, it will be treated as immovable properties. Next, attached to what is so embedded for the permanent beneficial enjoyment of that to which it is attached. Here, composite supply of work contracts is treated as supply of services. If any contract is related to work contract composite supply, then it is treated as supply of services as per schedule 3. ITC and work contract service for construction of an immovable property is blocked except these three cases. What is these two cases? It is an input service for furtherance of course of work contract. If you are a work contractor, you are taking your work contract inputs, you can claim the ITC. There is no issue on that. Next, immovable property is a plant and machinery. If that immovable property is a plant and machinery, and that improper plant machinery you are using for business purposes and you can earning the money, then on that plant and machinery, even though that is affixed to the earth, you can claim the ITC is allowable. Here meaning of construction means what? Meaning of plant and machinery means what? Next, but excludes. Construction include reconstruction, renovation, addition or alteration or repairs to the extent capitalization. If you are capitalizing the asset, then construction is treated. If you are not capitalizing, it is a revenue expenditure, it is not treated as capitalization. In revenue expenditure, you can claim GST input, there is no issue on that. Next, thus if reconstruction, renovation, addition or alteration or repairs are not capitalized, then it would not tantamount to construction under GST law. Consequently, ITC and work contract services avail on such contract which is not capitalized, whether for an immovable property or for an plant and machinery, would be allowable to all recipients irrespective of the line of business. If you are in a plant and machinery is using irrespective of person, you can claim the ITC, there is no issue. Next, plant and machinery means apparatus, equipment, machinery fixed to the earth by foundation or structure support that are used for making outward supplies and goods, and include such foundation or structural supports. Here but excludes plant and machinery excludes some items, that is land, building or civil structure, telecommunication towers and pipelines laid outside the factory premises. It will be excluded. So on this, if you have any input, it will be treated as blocked credit. So ITC and work contract service available for construction of eligible plant and machinery is allowed to the recipient irrespective of the line of business of such recipient. For instance, ITC and work contract service for construction of machinery fixed to earth by foundation would be allowable. However, ITC and work contract service for construction of telecommunication tower would not be allowable as it is a blocked credit. Next, ITC and work contract for construction of immovable property. Is available only following three situations will be satisfied. Following will be satisfied. First one, that is when the work contract service is available by the work contractor. If he is a work contractor, he is a regular course of business, so he can claim the ITC on that work contract related items. Next, for construction of plant and machinery, which is a plant and machinery you can using for business purpose. In this case, ITC is allowable to all recipients irrespective of their line of business. Next, when the value of work contract service is not capitalized, if you are not capitalized in your balance sheet, then you can claim the ITC on that irrespective of line of business. For example number 29, ITC and work contract service availed by a software company for construction of its ITC. This is the software company and constructing the office which the items is used by you, and that items if you are on any ITC you cannot claim because it is a blocked credit. Next, to CD and Co, a work contractor of Noida, has been awarded a contract for construction of a commercial complex in Lucknow. Okay, work contractor, commercial contractor is constructing a commercial contractor. contract. Here what the person is a work contractor, so he can claim the ITC, no issue. So the firm avails the services of EF and Co, local work contractor of Lucknow, for the construction of complex. If also main person is using the local contractor work, and local contractor is given the bill, and in that bill he is having the input tax credit, the main person may claim that input because he is a work contractor. Next, ITC and work contract services availed by an automobile company for construction of a foundation on which machinery, so machinery to be mounted permanently. So here it is a plant and machinery, so you can claim any ITC related to plant and machinery irrespective of line of business, so allowable. Next, 31. What is there in 31? ITC and work contract service provided, no? 31, 32. ITC and work contract services availed by manufacturing company for construction of pipelines to be laid down outside India. It is a blocked credit. It is a blocked credit. For consulting firm, if you are a consulting firm, has availed the services of work contractor for repairs of his building, the company has booked such expenditure in its profit and loss account. If you are booked in profit and loss account, then ITC is allowable. Next, a telecommunication company has availed a service of work contractor for repairs of its office building telecommunication service. It is a blocked credit because it is a capitalized expenditure. Next, if you are constructed self construction of immovable property, if you are constructing a self construction, then what we can do now? If ITC and work contract services available by a taxpayer other than a work contract for construction of immovable property, here immovable property other than plant and machinery is not allowable, so it is not available. But what happens if taxpayer procures goods and services construct an immovable property for being used in the course or furtherance of business without availing the service of work contractor? Will ITC is available or not? So here the person is not using the work contract, on his own he is constructing. Whenever he is constructing, then the ITC is allowable or not? Even though in that case also ITC is not allowable, the answer is no. ITC is not allowable on goods or services received by the taxable person for construction of an immovable property on his own account, even though on his own account. So such goods or services used in the course or furtherance of business. Thus ITC and goods and services used the construction of an immovable property is blocked. Only case where the taxable person construct the immovable property for his own use, even the immovable property being construction for furtherance of course of business. So ITC and goods or services used in construction of immovable property is available only in the following three situations: when that is construction of plant and machinery, and value of goods or services is not capitalized, and when the construction is not on own account or not capitalized, or it is a plant and machinery, then you can claim the ITC. It is not treated as a blocked credit. Example number 35. A company buys cement, tiles, etc. and avails the service of an architect for construction of his office building. Here office building, so it is a blocked credit. MN Construction procures cement, paints, iron rods and services of architect. Is using for construction of commercial complex. Of one of its clients means they are doing the same business. It is furtherance of course of business, so it is treated as allowable expenditure. Next, a company buys cement, tiles, etc. and avails the service of an architect for renovation of its office building. The company has booked such expenditure in its profit and loss. So if they are showing in profit and loss account, this is treated as revenue expenditure and credit is allowable. Next, ITC on goods and services used by the automobile company for construction of foundation of which machinery irrespective of line of business, we can allowable that credit. Next, inward supplies charged to tax under composition levy. Here a supplier registered under composition scheme cannot collect tax from his customers, so he cannot collect the tax from the customers, and he issue the tax bill of supply instead of tax invoice. So he is not issued tax invoice. Supplier will be issued bill of supply. A composition supplier pays a lump sum tax at a specified rate on quarterly turnover. Based on quarterly turnover, he will pay the specified rate. Tax paid on goods and services under composition scheme is not available as ITC. So if you pay the any tax on composition scheme, is not available as ITC, since composition taxpayer shall not collect any tax on its supplies from recipient of supplies. It is obvious no ITC can be available in respect of such supplies by the recipient. Nevertheless, section 17(5) specifies block the ITC inwards received by the taxable person for composition supplier. Next, inward supplies by non-resident taxable person. Non-resident taxable person, here non-resident taxable person has defined in CGST Act. What that is, essentially a non-taxable person has no fixed place of this person has no taxable place of business. He came to India on an occasional basis, maybe he is a principal or agent on other person, and is providing tax paid on goods or services received by such non-resident taxable person is not available as ITC. So not available as ITC. However, tax paid by him on imported goods is allowable as ITC. So received by such non-resident person is not allowable as ITC, and tax paid by him on imported goods is allowable as ITC. Whereas ITC on goods imported by non-resident taxable person is allowable. ITC on services imported by him is blocked. So related to goods is allowable, related to service is not allowable. Next, inward supplies used for personal consumption. If you use for personal consumption, once the foremost condition laid down in section 16 for availing ITC of goods and services is that such goods and services should be used in the course or furtherance of business. If you are not using for course or furtherance of business, that is furtherance of business, partly for purpose of business or partly for other purpose, restrict the credit of such amount attributable to business purpose. What amount of business purpose you have utilized, that portion only allowable expenditure, allowable ITC. Next, furthermore, 17(5) also specified block of ITC on goods and services used for personal consumption. The personal consumption is not defined in GST law, that it may be understood in general sense, which may be used for non-business purpose. For example number 39, Mr. X owns a retail showroom of tires and tire tubes. He takes 4 tires from the showroom for his personal cars. Being used for personal consumption, ITC on such 4 tires is blocked. 4 tires will be blocked. Next, if you are giving free samples, gifts, goods lost or stolen, etc. Goods lost or stolen. Here, what is there in section 5? Some blocks on ITC related to if you goods given disposed by way of gift or free samples or lost goods or stolen goods or destroyed goods or goods written off. In that case, you cannot claim the ITC. It is a blocked credit. Here, what is the ITC in respect of goods that are disposed by way of gift is not available. Also, ITC and blocked loss of goods, stolen goods or destroyed goods written off. This will be because principally ITC is available only for payment of tax and output supply. Here, output supply, no payment is available. If you gifted one person for mobile, he will not pay any tax, and so that amount is not getting from other person, then it is not available as ITC. Next, hence ITC and gift and free samples are blocked. There is no tax is payable on its available supply in case of same. Next, meaning of gift. Here, gift means what? Gift means, as per gift is not defined in GST law. Gift will taking has section 122 of Transfer of Property Act defined that gift is a transfer certain existing. There is certain existing, that is movable or immovable property made voluntarily, and there is no consideration, without consideration, by one person called donor and another person called donee, and accepted by on behalf of donee. In common parlance, gift is made without consideration, is a voluntary in nature of made occasionally, and it cannot be demanded by any matter. Next, samples means sample also not defined in GST law. As per dictionary, sample means a small part or quantity intended to show that whole is like whole. For example, if rice business, if you have taken, there are packets. If you want to taste some rice, they will be taken from packet, then they assume that a whole packet will be considered same like that. That is sample parts. As per section 17(5), block of ITC will be goods that disposed by way of gift, disposed by way of free samples, or lost goods, stolen goods, destroyed goods, goods that are written off. Next, ITC in the hands of supplier in respect of sales promotion scheme. If it is a sale promotion scheme, here if it is a promotional scheme, they may be given like sample and free gifts. If it is a sample and free gifts, here we will be consider sample which is supplied free of cost. If you here there is no consideration, without any consideration, does not qualify as supply under GST, but there is an exception in schedule 1. What is that exception? ITC shall not be available to the supplier on the input services and capital goods to the extent they are used in the relation of the gift or free sample distributed without any consideration. However, where the activity of distribution of gift or free samples fallen within the scope of supply on account of provisions of content, if it is come under the preview of supply, then ITC and that eligible ITC will be available. Here next, buy one get one free offers. If you taken one item, purchase one item and take one item free, they are considered as in one item only this consideration is exists, so ITC will be available. If they are collecting the single price and giving two items, it is treated as one price for two items, so composite or mixed supply is chargeable as per section 8. Next, discounts including buy more save more offers. Here also same, and the discounts is entitled for ITC. Next, secondary discounts. These are the discounts which are not known at the time of supply or of the offered after the supply is already over. Such discounts shall not be excluded while determining the value of supply. So there is no impact on availability or otherwise ITC in the hands of supplier in this case. Next, ITC reversal when return of time expired medicines, drugs are treated as fresh supply. Here where the return of time expired medicines, drugs are treated as fresh supply. The common trade balance pharmaceutical sector is that drugs and medicines, here goods are sold by the manufacturer to the wholesaler and by the wholesaler to the retailer on the basis of invoice or bill of supply. They will send on bill of supplies, they will send. Such goods has defined in lifetime which is normally referred as to the date of expiry. There is a date of expiry. Such goods which have crossed their date of expiry are collaterally referred to time expired goods and are returned back to the manufacturer on account of expiry to the supply chain. So here that a retailer wholesaler can return the time expired goods either by treating the same as fresh supply or by issuing the credit note. For that purpose they must issue the credit note whenever they had taken the credit now at the time of purchase, and now they are returning the goods, you must issue the credit note and reverse the ITC. Next, return on time expired goods by treating as same as fresh supply. Next, same this one. For example number 40. What is there in example number 40? If manufacturer has availed the ITC of 10 rupees at the time of manufacture of medicine valued at 100 rupees, at the time of return of such medicine on account of expiry, the ITC available on the basis of fresh invoice issued by the wholesaler is 15 rupees. So the availed ITC is 100 rupees. The manufacturer medicine value will be 100 rupees. At the time of return of such medicine expiry, the ITC available by a manufacturer on the basis of fresh invoice issued by wholesaler 15 rupees. So when the time expired goods are destroyed by the manufacturer, he would require to reversal of ITC of 15 rupees and not on 10 rupees. So ITC will be reversal. Next, tax paid in fraud cases, detention or confiscation. Tax paid on fraud cases or detection cases. If it is related to section 74, 129, 120 is not available ITC. If one tax officer or GST officer given show cause notice, on basis of that show cause notice you have paid the tax, on paid of the tax you cannot get the ITC. That is section 74, 129, 130 is not available as ITC. This section prescribes the provisions relating to tax paid on result of evasion of tax or upon detention of goods or conveyance or transit or towards redemption of confiscated goods. goods. So you cannot claim the ITC on that product. You cannot claim the ITC on that product. So you cannot allowable for ITC on that product. Next section 18. Section 18 we will see next class here.